If you've been wondering what is really happening in the Houston real estate market right now, here is the truth. The market is shifting, but it is not crashing. What we are seeing is a market that is moving back toward balance, and that matters for both buyers and sellers. Let's break it down. According to the latest Houston housing data from February, single-family home sales were down 2.2% compared to the same time last year. On the surface, that sounds like the market is slowing. And yes, closings were a little softer, but that is only part of the story. Pending sales were actually up 13%, which is one of the most important numbers in this report. Pending sales tell us what buyers are doing now, not what happened weeks ago. And what that tells us is that buyers are still active, still writing offers, and still preparing for the spring market. So no, demand has not disappeared. The next major shift is inventory. Active single-family listings rose 15.2% year over year, and Houston moved up to 4.8 months of inventory. Last year at this time, inventory was at 4.3 months. That may not sound dramatic, but in real estate, that change matters. It means buyers have more homes to choose from, more time to compare options, and in many cases, a little more negotiating room than they had during the highly competitive market we saw in recent years. That is a big shift in how buyers need to think. Instead of rushing into the first decent option, buyers can be more strategic. They can look harder at condition, location, layout, monthly payment, and long-term value. Now let's talk about prices, because this is where people start jumping to the wrong conclusions. The median home price in Houston dipped 0.9% to $322,078. At the same time, the average home price actually rose 2% to $415,091. That tells us this is not a collapsing market. This is a moderating market. Prices are adjusting, but the market is not falling apart. In fact, what we are seeing is a healthier environment where pricing has to line up more closely with what buyers are willing to pay. And that is important because unrealistic pricing is getting exposed faster now. Another major factor here is affordability. Mortgage rates have now fallen for 8 straight months. And when you combine lower rates with slight price moderation, the typical Houston buyer in February was looking at a monthly principal and interest payment that was about $149 less than a year ago, assuming 20% down on a median priced home. That is about $1,186 in annual savings. That does not mean homes suddenly feel cheap, because affordability is still a challenge for a lot of people. But it does mean the math is getting a little better than it was before. And for some buyers, that opens the door again. Now let's shift to sellers, because this is where strategy really matters. Homes are taking longer to sell. Average days on market reached 69 days, which is the highest level since March of 2013. That is a very important sign. Sellers can still sell, and well-positioned homes absolutely still move. But this is no longer the kind of market where you can overprice a property, do minimal preparation, and expect multiple offers right away. Today, sellers need better execution. That means stronger pricing, better presentation, cleaner staging, higher quality, photos and video, and marketing that actually creates urgency. If the property is not priced right, or if it does not show well online, buyers are more willing to move on because they finally have more options. Another part of this report that really stands out is how differently the market is performing at different price points. The biggest slowdown happened in the $250,000 to $499,999 range. That segment was down 9.9%, and it also represents more than half of all homes sold in February. So this is the part of the market where buyers are feeling affordability pressure the most. Meanwhile, the lower price segments below $250,000 actually posted gains, and the luxury market over $1 million also grew, up 9.5%. That tells us Houston is not moving as one single market. Different price points are behaving differently, and different neighborhoods are going to feel this shift in different ways too. That is why broad headlines can be misleading. You cannot look at one headline and assume it applies equally to every seller, every buyer, every subdivision, or every price point. So, what is the real takeaway? Houston is in a rebalancing market. Buyers have more opportunity than they had a year ago. Sellers still have a path to success, but they need sharper strategy. And everyone needs to make decisions based on today's numbers, not yesterday's market. If you are buying, selling, or trying to decide whether this is the right time to make a move, the smartest thing you can do is look at the numbers in the context of your price point, your timeline, and your goals. If you want help breaking down what this means for your area of Houston or your next move, reach out to me directly. I'm Nicoletta Barker, and I would be happy to help you create the right strategy for this market.